So before we go ahead and start, I just wanted to just address again that besides this Paycheck Protection Program, there is some other stimulus relief that is out there that we've covered in past calls, but I just wanted to go ahead and address that first. So we have the Families First Coronavirus Response Act, as well as the Treasury Grants Income Tax Return and Filing Relief. And then this Coronavirus Aid, Relief, and Economic Security Act. So without further ado, though, I'd like to go ahead and introduce our speakers, Mr. Paul Carlin and Mr. Steve Skaggs. Gentlemen, take it away.
Good afternoon. This is Paul Carlin, PeoplesBank. And even though I'm going to cover the next 3 or 4 slides, I am going to ask my colleague Steve.
Hey, Paul, this is Steve. You're breaking up a little bit, just so you know.
Sometimes on speakerphone it doesn't work well. All right, is this any better?
It is, thank you.
Good. So, and I'm going to ask Steve to stay unmuted. I never thought I would say that. So that he could assist me with some clarification on a couple of items on my slides. But I'm going to start off by saying that, first of all, thank you for the invitation, Rick, and really happy to be part of just about anything Manufacturing Works does. A great organization. We've been members for, I don't know, 6, 7, 8 years now, and it's a very good organization. Our bank, I'm going to put a 5-second plug in here. We are a little over about $4.4 billion in total assets. We're headquartered in Marietta, but we've got a very strong presence in the greater Cleveland and greater Akron markets. We are predominantly a commercial lending bank, dealing with all types of manufacturers, distributors, service providers, and investment real estate professionals. So I give you that just by way of background to give you an idea of who we are and a little bit of our background, and also let you know that we are very much involved in this program. We, last I checked, had over 1,200 applications across our footprint. So with that, the Paycheck Protection Program is an SBA 7A loan. I'm sure people on the phone may have a 7A loan currently for your business. This does fall under that 7A loan program. And this was created as part of the CARES Act. And the funding on this is approximately $360 billion. It's going on right now. Many have made application. We banks in general are still accepting applications. Let's go to the slide 4. It talks about who is eligible. Small businesses, and for the most part, a small business is defined as any business under 500 employees. Nonprofit organizations, veterans organizations, sole proprietors, independent contractors, and self-employed individuals. Steve, this is where I'm going to ask you to pipe in. I think 2 or 3 of these entities are just going to begin to accept applications on them this Friday. Some we've already accepted this past Friday.
That is correct, Paul. So if you, independent contractors and self-employed individuals, the window for application opens for those applicants this coming Friday, April 10th. For the other 4 categories listed, applications are open. And just to clarify on small businesses, there is the 500 employee cap. There are exclusions to that cap. Number 1, if your business is under the SBA definition of size determination larger than that, and your NAICS code permits a larger number, that is permitted also. And then there is also the carve out for hospitality, which would not apply for this group.
Great, thanks, Steve. How much can you borrow? And many times I've asked people really to work backwards here. There are 2 aspects to the program. How much can you borrow, and what are you going to use the money for? You borrow the money based on 2.5 times your average monthly payroll costs. You use it for 8 weeks of combination of payroll costs, rent and or mortgage interest, utilities. I think the idea why this is 2.5 times the monthly average is that at least 8 weeks of it will be covered by payroll. And that's one of the tests that we'll talk about in a couple minutes. But the use of these proceeds, 75% of the proceeds minimum must be used for payroll. If not, that portion that you didn't use that you should have could likely not be forgiven at the end of the program. I'll come back to that in a minute. So you take the maximum amount is the lesser of $10 million or 2.5 times the average monthly payroll costs for the year before the loan is made. It's a little ambiguous. We've talked to some folks, and again, Steve, chime in, but what we're asking for in terms of payroll information is all of 19 and the first 2 months of 20. Quite frankly, the bank's position is we really don't care if you use the number that you qualify for based on the last 12 months. In other words, the last 10 months of 19 plus the first 2 months of 20, or if you used all of 19. We have to trust that the number that you are submitting to the bank is going to be correct. What we're asking for to make sure that our SBA loan file is complete is 14 months worth of payroll information. Also, it says here that the outstanding balance of any EIDL loan made after January 31st could also be refinanced under this program. That is true. The problem is that the EIDL loan really wasn't made known until the end of March, for the most part. So if you have been granted an EIDL loan prior to this past Friday, the 3rd, that loan can be refinanced with the Payroll Protection Plan loan as well. And we'll talk a little bit in a minute about what constitute, payroll costs, et cetera. Another point here is that the SBA Express loan, some folks have an Express loan that usually goes up to $350,000. Many of you have lines of credit. That now can be increased up to $1 million up till December 31st of this year. It's a temporary increase.
Hey, Paul.
Next slide. Yep.
I was going to add real quick, in the revision in the most recent SBA Form 2483 dated 4/20, the EIDL loan, they are subtracting out the advance. So if you did receive an EIDL loan and you got the $10,000 advance, so it would be 2.5 times plus the EIDL minus the 10. So it's the net advance is what the maximum you would be able to go for. So, and that would include that your intention is to refinance 100% of the non-grant portion of the EIDL. And that does have to be answered on the application. It is question number 4 that the borrower has to answer.
On the application. Okay, good. Thank you, Steve. On the next slide, allowable uses. As I mentioned to you, 75% of the use of your proceeds must be used for payroll. Employee salaries, benefits, sick leave, medical leave, insurance premiums. Also, as part of payroll, it can be state and local withholding, not federal or Social Security. Other uses for the funds then can be payment of interest on a mortgage or rent. Usually you don't have both. If the real estate is owned by the operating company or even by an affiliated real estate holding company, you could use the interest portion of that mortgage on as one of the expenses. If you lease your building, you can use your rent payment as an expense. And then finally, utility payments are another allowable use. So my suggestion is you calculate this first. What do you need the money for? Then you do the 2.5 times payroll and decide that, okay, this is the maximum. Again, that's to determine the maximum amount of the loan. The idea here, and Steve's going to cover this next, is you may want to try to get as much of this forgiven as possible, if not up to 100%. If your goal is to get 100% of the loan forgiven, my recommendation is you start backwards, figure out what the uses are for, and then if your payroll, again, if your uses were $1 million and the payroll calculates to $1.2 million, well, I would only borrow $1 million. $1.2 million tells you what the maximum is you can borrow. Steve?
Thank you very much, Paul. Moving on to the next slide, the loan terms. Talking a little bit about what changed. Obviously, everybody heard when the bill passed, the interest rate was going to be 4%, the loan term was going to be 10 years. Well, in consultation between the SBA and the Treasury, a decision was made, and they actually provided support for the interest rate they chose as 1%. So typically, the loan, even in the deferment period, which is PowerPoint, the point there, number 3, the loan will continue to earn interest at 1% per annum. The total loan duration will be 2 years, but there will be no prepayment and no payment deferral for the 6 months. And actually, the no prepayment fees does go for the life of the loan. So, that's the nice part about it. At any time you pay it off, that's fine. And then the payment deferment is for the full 6 months after the date of the loan. So that ticker starts when you sign the proceeds. And what's also nice is that the SBA is waiving all borrower. So normally on an SBA loan, it would be anywhere from a 2% fee up to a 3.75% fee, depending on the size of the loan. Those are all waived. And then also there's usually an ongoing service fee that the lender, we have to pay for the privilege of having that guarantee. That is also being waived. Now, I think the most important thing on this slide is to talk about the covered period, because most people are excited about the Paycheck Protection Program because of the potential for loan forgiveness. And the period by which loan forgiveness will be calculated began on February 15th. And that date's important because that's the date that that's your number of employees you had, which you're going to certify in your application. There's a lot of things, and that's the reason why we're looking at 14 months of payroll records at PeoplesBank, so we can kind of have a prior year, a rolling year, but we do have payroll records that include 2/15, which is that magic date when the program goes back to for your employee account. So the covered period is that 8-week period where you'll be using for your analysis for forgiveness. So that's why that covered period is extremely important, because it's any 8-week period between 2/15 and 6/30 that you're looking at. And obviously, the requirement for small businesses to obtain credit elsewhere does not apply for this loan. And also the fact that there will be no collateral, so there'll be an unsecured loan, and there'll be no personal guarantees required for this loan. But I need to stop there. The legislation is extremely clear that if you default on this loan, they will come after you. And they actually did put that into the actual interim final rule as well as the legislation. So obviously it's something you don't want to default on, but they do not have a direct collateral or personal guarantee. If you want to move on to the next slide, please. So typically with this program, the SBA did something different than what they did with the economic injury disaster loans. Those were direct loans that you as borrowers would go to the SBA to receive disaster relief. With this program, what the SBA decided to do was to use their army of delegated lenders. And those delegated lenders, can go through and take care for you. Now, I will be honest with you, and Paul can vouch for me on this one. There are lenders, whether they're community bank, regional or national, who have opted out of providing this as a global product to the service areas that they provide coverage in. So some people have limited to only their borrowing customers, borrowing and deposit customers. And part of that, just so you know, goes back to the fact in the interim final rule, they added a Bank Secrecy Act clause if someone's not a current customer of that bank. And that will elongate the process. If you've ever gone through applying for a loan at a new institution, articles of incorporations, there's beneficial ownership, there's all these things. Well, they did not relieve the banks of the responsibility of beneficial ownership and BSA for this loan program. So that's the reason why you're seeing a lot of banks trying to take a shortcut and not offer it globally, but just offer it to their customers because they've already gone through BSA. Also, the loans are 100% guaranteed from the federal government. Early copies of the act, we're going to have it after the forgiveness period, revert down to a lower percentage. So that actually works out pretty good. So typically on the chat, are you wanting people to do those as we're going along, or we'll catch those at the end?
Whatever is best for you guys.
I was gonna say, if it's okay with the chat, we'll catch everything at the end. But let's go ahead and that we'll have more time for the questions and kind of go back to the specific pages people are referring to. So if we could move on to the next slide, please. Okay, so typically considerations for an approval. And I guess when we talk about approval, there's a couple different stages that the SBA has us going through. So number one, obviously your business needs to be in operation on or before February 15th, 2020. And obviously you need to have employees and you need to show them that you've paid salaries, payroll taxes, or paid independent contractors under a 1099 miscellaneous. Typically, there was guidance that came out today from the SBA and Treasury that we are actually, as a bank and other banks, are going back to them because it's FAQs, and there was some confusion, especially on the independent contractors. So that is still an open issue at this time because we feel that the FAQ response is inconsistent with the interim final rule, which was issued by the SBA and Treasury last week. Obviously, the one presumption in all these loans is that your business has been impacted by COVID-19. And that impact can take a lot of different ways. It could be supply chain. It could be the fact that you may have had employees that have been infected with COVID-19 and you've had to discontinue operations. It could be under the governor's orders. There's a lot of different ways in which you can be impacted by COVID-19. And that is part of what you as the borrower in this scenario will actually certify on the second page of the 2483. Obviously, we get back to not more than or the greater of 500 employees or the side standards of the number of employees in the SBA rule. Typically, the size eligibility standards should be available from any SBA field office, any SBA small development corporation, and your lenders who are SBA lenders. And then last thing, as I mentioned earlier about businesses not more than 500 people per physical location with an NAICS code with 72, they actually can have more than 5, but they just can't have it at one location. And like I said, manufacturing usually is an NAICS code that begins with 3, so I don't think that would apply to the group that we have today. The next slide, if we want to move on there, is the big one. What is my eligibility for loan forgiveness? And before I say a word, I just want to say the SBA in the 31-page interim final rule clearly stated that they will provide more guidance at a later date. So, Paul and I scour the reading. We read a lot of material. We try to be the best advocates for our clients and our prospects. But the truth be known, if anybody's telling you they know exactly how this is going to be forgiven, I don't know where they're reading that because it's not available from the SBA or the Treasury as of this moment. So typically it goes back to this 8-week period. So the covered period for the loan forgiveness begins on February 15th and runs through 6/30. So that's the coverage period for this. So it's an 8-week period after the origination of your loan. So let's be honest, your loans, if you've got application in right now, you may have an SBA authorization, but you probably don't have your loan funds yet. So it's really going to be an 8-week period after your loan disperses that you'll be able to use. And it doesn't say it has to be the first 8-week period. It just has to be a time between February 15th and June 30th, 2020. So, and we talked about what are eligible forgiveness. Paul talked about payroll cost and excluding compensation over $100,000. I will say that the FAQ that came out today from the SBA and Treasury provides a little bit more guidance on what that means. And I would refer you to that and have your payroll processors and your CPAs refer to that when they are helping you complete your applications. Paul had mentioned earlier, it is interest payments on any mortgage incurred, but that mortgage must have been in place prior to February 15th, 2020. Same situation with any payments of rent on your lease. It must have been enforced prior to that date. And the same thing with utilities. Just so you know, we have not seen any guidance on what is considered utilities. So obviously you have your traditional gas, electric, telephone. You would also, I think internet providers would be extremely important in this day and age. So I would seek advice on that also to define what a utility is. But those are the things that they'll forgive. And remember, the percentages need to be 75% or greater of the loan amount you've taken needs to go towards payroll related cost. 25% or less can go to the other three. So be careful when you spend your funds that you're spending them for an eligible purpose, because on the back end of this, you're going to go back to your lender and you're going to provide these records to your lender. So it's going to be like 10th grade math, show your work, and we're going to have to go through. And at that time, you know, we've been given a period of up to 60 days to validate your information for loan forgiveness before we have to submit it to the SBA. And then the SBA has a processing time before they'll pay off your loan in full, if it qualifies for complete forgiveness. If at any point in time the bank or the SBA does not agree with your numbers, you may not receive full loan forgiveness. So that's why it's so important that you keep excellent records for this eight-week period, and that you do everything possible to make sure it qualifies. And like I said at the beginning, we don't know everything about loan forgiveness because the SBA has not, they gave themselves an out saying they'll provide more rules later on. So if we move on to the next slide, we'll talk a little bit about documentation needed. Now, typically, there's a lot of different sources out there. I think Paul provided what we're looking for. Obviously, you know, you're going to need to know a couple different things there as far as the limits and exceptions. So just keep that in mind, what you can do. And then the one thing on this page here that I'd note is that rehire exemption. So this is where it's going to get very interesting, because if there's a reduction in your FTE, we've not seen any guidance on how that would impact your forgiveness. So, you know, typically it's an interesting situation there. And obviously we're going into this program with you as borrowers, and you're going with your own lenders, and we don't know how the exit's going to be. But obviously, you know, they've given us enough instructions how to structure everything for you. So if we want to move on from limits and exceptions to the next slide. So filing requirements, obviously documentation needed. These are going to be your supplied numbers. Obviously, you know, it's a lot of information there for you. You should be able to hopefully get that easily from your payroll provider, as far as your IRS tax filing, state income. The canceled checks, payment receipts, transaction accounts, those are probably more what you're going to see for a sole prop or potentially an independent contractor. But you will need to have this data available along with your application for it to move through the lender process. So if we want to move on to the next slide. So typically there is a certification from a representative to the eligible to receive it. So on the actual form, which is SBA form 2483, the signature on this is actually doesn't say the owner of the company. You do have to provide ownership breakdown on page 1, but it actually is a signature of an authorized representative of the applicant. So that's who will be certifying that all the questions and everything is correct to qualify for the program. So the bank in this program is not certifying anything. It is actually the borrower that is certifying that it's true and correct. And so we want to make sure that you take your time, you fill out your application properly, use your resources, because then the lender has to kind of confirm your math. Okay, that number times 2.5, okay, and make sure you checked all the right boxes. And one thing I will point out in the application, to be specific, if you answer yes to questions 1, 2, 5, and 6, it clearly states that the loan will not be approved. So I just want to make sure, you know, when you're looking at the application, make sure you read all the questions and make sure, you know, if you do answer yes to either 1, 2, 5, and 6, that you realize the loan can't really move forward. So if we move on to the next slide then. Okay, so typically how to apply. Paul, you want to handle this one?
Sure. The form that is needed, hopefully you see it out there. If not, if you need, we can send to Rick a copy of the form, and then he can get it out to you. It's not a PeoplesBank specific application form. It is an SBA form, and it's Form 2483. And make specific note in the bottom left-hand corner when it says Form 2483, there should be the date of 4/20 afterwards, April of 2020. There were some March 20s that went out there. Those were old. Do not use those. You want the April of 20. You will apply to the bank and send, and again, we suggest you use the bank that you currently bank with, okay, where your current business checking account is. In the event, we've taken on some new applicants. Either their bank wasn't doing it, or for one reason or another, they decided to come to us. We've told them that we're more than happy to handle those, but we are requiring that you open up a business checking account with us. And the importance of that really is to help you proving the forgiveness part and proving the expenses going through. If you see the loan proceeds going through an account and you see all the various expenses going through for the 8 weeks, it makes it a lot easier for you to reconcile. So there's again, contact your existing bank really more than anything. The bank is going to want, or I'll speak to what PeoplesBank is asking for. We're asking for the application. If you are new to the bank, you must provide what Steve mentioned is important for Bank Secrecy Act for a bank, which would be articles of incorporation, bylaws, articles of organization. Obviously, if you're an LLC, we can pull the form from the Secretary of State to verify that you're actually a legal entity. Your tax ID number, and preferably your NAICS code if you have that available. It should also indicate, I think, under the Secretary of State when the business first started. And also, you've got to have your payroll information. That's been coming through to us in various forms as well. What I try to tell people is call your payroll provider and ask them for 2019, your 941 reports, 941 reports, payroll reports. And then for at least the first 2 months, you can give us your first quarters, if they're done, your first quarter 941 reports, or your internal payroll reports that can substantiate, you know, how you arrived at the numbers. Send those in. We then take the application and the payroll information. We upload it to an internal folder. We fill out a couple of forms ourselves, and then we submit to the SBA via our E-Trans, or via a system that we have internally, so that we could get it up into the system. I want to make sure that I provide some very clear guidance here, because I think there's been some confusion based on what other people are saying, such as, "Oh, I've been approved," or "Oh, I'm ready to go. My closing is going to be this week. I'm going to get the money this week." That is not true. The truth is, all banks, whether it's PeoplesBank or Citicorp, submits to the SBA, and we have a lender number. We get back from the SBA an SBA loan authorization number. And what it says is that we have funds committed, but they are yet undispersed. That's what we're shooting for. They've pretty much then reserved funds for that deal, for that business. It will be incumbent upon us to do some very cursory verification, making sure we have a complete file. We're not going to do a deep dive. We are not going to, hire forensic accountants to come in and audit your payroll numbers you've submitted to us and see how you arrived at the number. Okay, we'll be able to see some various totals. Oh, okay, yeah, I see. I got that times. We want to make sure your multiplication is correct. The 2.5 is correct. Sometimes it has not been correct. So that we make sure that you have a complete file, so that nothing will stop your loan from moving forward. We have not. No bank, when I say we, has received from the SBA the final loan documents, promissory note, etc. Nothing. And therefore, no funds anywhere have been dispersed. I would say the bulk of businesses who are going to apply for this probably already have, but we still have a handful that have not. Doing so at this time does not preclude you from being eligible or being able to get the funds. But my encouragement that you do it sooner rather than later. Talk to your bank about what their requirements are, and more importantly, get your CPA involved immediately, because the CPAs are very well read on what's going on with this, as well as what it is that you're going to need, and they can certainly assist you. That's all I have, Rick. It's up to you, back to you.
Great, thank you, gentlemen. So let's go ahead and go into the chat box and address the questions that are out there right now. So the first one, it says here, if you applied and ended up giving the wrong amount to your payroll, can you go back and adjust the amount after it's been submitted? Also, how long is the current process taking? Has anyone received the completed loan yet? Which you've just addressed that part. But if you could address the other.
So, yeah,
go ahead.
I'll
go ahead, Steve.
I'll take the first part of it. If you applied and ended up with the wrong amount to your payroll, can you go back and adjust the amount after it's been submitted? And the answer is that with our customers at PeoplesBank, we've had a couple where that's happened. What we've done is we've stopped the process, have them resubmit. Then we have the lender update their form, and we have then gone out after that, what I would call confirmation process, and we have been able to amend the SBA authorization that Paul talked about. Let me tell you right now, though, that's one of the reasons why Paul and I are taking a lot of time. Check with your specialist on it. Check with the people who know what payroll is and how it's calculated, stuff like that, and take a lot of time figuring out the right number, because that process I just explained is not easy in the electronic transaction system that the SBA has. So by doing that, someone has to be taken out of the loop of production to be able to correct it. But if you check with your institution, I know we can. I don't know if they will. So that's my answer to that. And I think Paul already addressed to you how long the process is taking. Right now, I tell Paul and I tell everybody, we have about 4 steps of this process down: the application, the lender review, the credit confirmation, the authorization. What we don't have is anything after the authorization, and all banks are waiting for what's called the SBA's program guide for the Paycheck Protection Program. Once we have the guide, that'll give us the soup to nuts, is a nice way to put it, of how the program should run. That'll have the information we need to really answer all your questions. But right now, I think we have 4 pieces of the pie, and we're probably missing the rest of the pie.
I can speak to that as well. I spent Friday late a good 4 or 5 hours on Saturday and a good 7 hours on Sunday inputting applications on behalf of my customers. Each one takes minimum of a half hour, okay? We just started to get SBA authorization numbers back yesterday. Of the 20 that I submitted, I received 5 authorizations back. Our bank, like I said, has 1,200 applicants, so there's about 30 people that have been deputized to input these after I've input and after all the bankers have input. There are about 30 people within the bank that have been deputized to input these into the SBA, but prior to doing so, they are looking at the file, making sure at the very least there's the requirements from the borrower as well as the requirement from the banker, me, that has to fill out 2 forms. When they get that, they put through the information. If they can't read Social Security numbers, they're coming back to us and asking for, you know, is that the, what's that number there? Or is the NAICS code correct? Or what date was the business established? So the more thorough you are in filling that out, the quicker it will help us to get this process taken care of.
Great, thank you. And then another question here says, one slide showed a coverage period of 2/15 through 6/30. Can I use payroll costs from 2/15 through 6/30 or only for 8 weeks after the loan?
8 weeks after the loan is dispersed.
Okay. And then bringing up other questions. Can members of an LLC use self-employment income as proxy for payroll?
That's a tough one. I'll take that one. And the reason why is the Act is very clear on payroll records being submitted. So if the self-employment income doesn't run through a payroll system, you may have to wait until the self-employed and contractors start applying on Friday. And like I said, that's part of the guidance that we don't have. What I know is they keep on saying we need payroll records. And so I'm thinking, based upon what I'm reading there, it sounds like it's almost like a distribution or guaranteed payment. And I don't know if that could be considered a payroll record.
1099 certainly would be.
Yeah, 1099 miscellaneous would be fine, but I don't know if that's the way the self-employment income is going to be dispersed. And so that's why I'm saying there might be a situation where we need to get more guidance on that. And like I said, and we don't have enough right now from what we have in print from the SBA to answer that question for you, and I apologize.
All right, we do have another question here. It says, our payroll report from our payroll service for 2019 shows quite a bit of overtime. Due to slowdown, our workers may not have had as much overtime. If our payroll does down due to this, will it impact our loan?
Well, the application, the way it's set up is it's an average monthly payroll. So, it's a prior year. So the idea of the SBA's program is they want to get you back to where your workflow was for the prior periods. And that's another reason why they're giving you 2.5 times. So you can also cover some other expenses for this too. So business owner workers may not have as much overtime as our payroll.
I understand. I think we're the...
Yeah, you think the word's going, Paul?
Yeah, I understand where they're going with that. It's, last year we had a special project going on, for example, so we authorized a ton of overtime. Had COVID-19 not even happened, there's no way we would have had that kind of overtime like we did last year. So therefore, is all the overtime we have, is that skewing my numbers a lot higher toward what my average monthly payroll is? Yeah, it is a little bit. It evens it out a little bit since you're able to look at it over 12 months. That's why I recommended earlier that you look at this backwards. Figure out what your costs are going to be in this 8-week period coming up that you're going to need the money for. That tells you the average payroll for monthly times 2.5 tells you the maximum amount of the loan that you're authorized, that you're eligible for. That doesn't mean that's how much you have to borrow.
Got it. We have another question here. It says, we pay a portion of our employees' health expenses when they go for medical treatment, in addition to paying a major portion of their health insurance premiums. Are the medical reimbursements considered part of the payroll costs in the application?
Medical reimbursements.
I know the health insurance premiums are, because that's actually one of the items that's spelled out. I'm not for sure about the medical treatment. That one.
I wonder if that's through the HSA accounts and or through the oh my goodness, I'm having a senior moment here. What happens when you're out of pockets, you apply and you get it back, and you use it or lose it that year? I forget what those accounts are called.
Yeah, but I know from, I'm looking at page 15 of the interim final rule, and it does say under section R II, costs related to the continuation of group healthcare benefits during periods of paid sick, medical, or family leave and insurance premiums. So, but then obviously, payroll costs are defined on page 10 of that. And, they get into compensation, paid vacation, payment of employee benefits consisting of group healthcare coverage, including insurance premiums and retirement, payment of state, local taxes assessed. So I would think it sounds like that's probably a great question for
the
your
CPA,
just to make sure.
Absolutely.
Because the one thing, they haven't asked us to make those type of delineations for you, but when you're saying health insurance premiums, that appears to be covered under page 10 of what qualifies as payroll cost. But as far as the medical reimbursements, you got me there. I don't have an answer for that one. I apologize.
Okay, we do have some other questions that were sent ahead of time that I'd like to go ahead and ask now. It says here, we've been hearing about website issues during the application process. Is this more of an individual bank issue, or is this an SBA issue? Do you know?
SBA.
Well, I think it's two parts there. Some banks are having you do the application on their website, which is the 2483. The authorization, which is what we're doing after. So like Paul's my lender, I'm his credit guy. So, Paul does his part, which takes time. And then the next, part of the next steps is credit and authorization. The authorization system is also extremely bogged down because it's never had this many users. And it also has crashed a few times yesterday and today. So some people are taking the applications directly through a website through their service. Those have been slow, as well as the SBA system's been slow. It's just, there's never been volume like this in any history.
Yeah,
but Rick, it's easy for me to throw the SBA under the bus. So since they're not here to defend themselves. So
of course. Yeah, one of the examples we had heard about was when you were inputting information into the system, and then you went into the next screen, and the information that you had input, you needed to re-input because it didn't capture it. So we didn't know if that was an SBA thing.
And not here, no.
Okay.
Well, I think the issue there with the SBA, if you're not familiar with it, there are, they refer to things as the project address, the business address, and then the principal address. But they do have features to copy and paste that down. So, it makes it faster, but you do have a manual entry process, and it is very much a older system.
Okay. We do have another question here in the chat box. It says, does the 60 days require a medical premium to be split between days in the 60-day period and days not in the 60-day period, or do we use the whole bill because it was paid in the 60 days?
Oh, you're saying when the expense was incurred versus what period that expense covered? Did I translate that correctly?
Let me just, Steve, if you could maybe type that response in there.
It's Paul. I don't have access to the.
He says yes.
Yeah. Okay. Yeah, that's what I think they're talking about. So in other words, if on May 15th, if my 60 days of expenses ends on, we'll say June 30, okay, and on June 15th I paid a whole bunch of medical premiums, which are good for the next 60 days. I think it's an expense that is incurred. Okay, I don't think you need to justify that this was an expense paid on June 15th that is going to last until July 15th. No, it's an expense. It was a payroll expense that occurred. Steve, do you see that any differently?
Yeah, I think you're right about that, Paul, because it's an expense that's tied to the medical premium for the employees you want to pay for that 8-week period. So it's a timing difference there is what I'm thinking about. But like I said before, when you're coming up with your numbers for your average payroll and you're doing all these calculations, work with a professional on it to make sure you like I said, Paul said you have a maximum you could be eligible for. Doesn't mean you have to take it.
Yeah, in a similar fashion here, it says in computing payments in the 60-day period, do we need to look at the total of a bill paid in the 60 days, or do we adjust the bill amount to cover only the actual days in the period? So for example, on an electric bill from March 15th to April 14th, is the total bill paid, or do you adjust only for the days after the 60 days start?
Again, I think you adjust it based on your bill that you're paying, no matter when time period's for. It's expenses incurred, not period incurred.
Because if you remember, the covered period goes all the way back to February 15th. So, if you're paying anything in advance for a future period, that's where it gets kind of confusing. So, the reason why is the program runs all the way to 6/30. And then from the date you sign the loan, you have 6 months of principal and deferred. So you have enough time to kind of go through and go, okay, this makes sense, this makes sense. So you can help with your professional partner, your CPA, your payroll processor, to come up with, okay, this is the period that I'm looking at, that will give me forgiveness of my loan. So that's the reason why it's an 8-week period after the loan disperses. But the idea is you can put your data together. So that's the one thing we got to take a little closer look at, and we don't have clear guidance on for you yet.
This bill was put together in a week's time, $2 trillion. Right. It takes me a month to figure out how I'm going to spend $100. So I don't know how they can,
Yeah, and then Munchin's is asking for another $200 billion to be added from Congress based upon a comment he made today. So now we're looking at almost $549 billion potentially.
Well, and then there was another question that said something about they had heard the possibility of the Federal Reserve getting involved. And if they do get involved, will that increase the amount of dollars available to alleviate some of the anxiety around getting applications in quickly? And what is the likelihood of something like that happening? If you guys can.
Yeah, so this is not a Federal Reserve issue. This is the Treasury Department, and this is part of the SBA. So if more dollars are going to be available, it will be via the means by which Steve just said that Secretary Mnuchin will go back to Congress, particularly Senator Marco Rubio, who chairs the Small Business Committee in the Senate, and ask for an additional $200 billion. Because you're right, there has been a fair amount of anxiety, and I've had applicants who on Friday at 4 o'clock have submitted the application to me, and at 5 o'clock have said, "Where are we?" So there's people are afraid that they're going to get shut out, and I say, don't worry about it, just apply. And I don't think the intention is for anybody to get shut out.
And that's why the program runs to June 30th for this. So yeah. I have a feeling they're going to continue to fund it. Getting back to the Federal Reserve comment, the Federal Reserve commentary is really more towards the banks, not towards any borrowers. Typically, there was a concern whether or not how they would criticize us for doing all these loans and bring them on our books so quickly. And that's something where there's cooperation, and that's where the Federal Reserve banks will get involved, because a lot of banks are either Federal Reserve, FDIC, ODFI, they're regulated. And that's really where we're trying to bring in the regulators to make sure they're part of it, so that they don't impact our ability to provide the service because of capital restrictions, things of that nature. Because the way the federal government's looking at it, it's a 100% guaranteed loan. Don't penalize the banks for using their capital to support our system.
Okay. Now, there was a question also. It says, when you're calculating the amount of payroll expenses, you're using gross dollars for payroll, but to determine what's forgiven, it says it's net payroll. Any thoughts around that?
Yeah, that's one of the reasons why I've been advising, my bankers and the people who have talked to me directly. It's like, you may want to think about removing sections 21, 22, and 24 out of your gross number, because on the back end, they're going to take them out. So, but that is a judgment call. I have seen guidance from some of the CPA, national CPAs, AICPA, I think, saying using the gross payroll number. And typically, I am not a CPA. I am a banker and I do credit. So, I would take their advice, but, I would ask them, based upon your suggestion, how do you think that's going to impact me on forgiveness? And ask them the same question. So I would like your, CPA, to show both sides, because, obviously if you're getting into this, one of the things that's exciting about it is I may not have to pay this back. Well, if you get advice that means that you don't get forgiven, I would ask them, can you tell me what will be forgiven out of this? Can you give me both numbers? So it may be advantageous to get a gross number and then a number without those three sections to kind of help you out.
Rick, for what it's worth, Steve and I both have a very hard break we have another conference call at 4. So I'd say we have a hard break at 3:59.
No problem. We have, looks like two more questions very quickly. One, it says, if we get a loan to keep our employees on our payroll while we are shut down, once we are back up and operational, if we have employees who take part in the FFCRE, will that have a negative impact on our terms of the loan?
I'm sorry, what's FFCRE?
That's the other sections of the CARES Act. Actually, we have no guidance on that at this time. The SBA and the Treasury have not given us any impact on that. So I can't give you an answer that I don't have. So sorry.
Yeah, just for reference, it's the Families First.
Oh, okay. Thank you.
All right. And then final question here. It says the SBA Disaster Loan has a $10,000 forgivable upfront component. Is that taxable income?
Great question.
Taxable?
But that needs to go to the SBA because that's an SBA program.
Yeah, my understanding is
SBA program.
Yeah, the 1030, the 10,000 is exactly what it says. It's a grant, and more often than not, grants are not taxable. Again, I may have stayed at a Holiday Inn Express, but I'm not a CPA.
No problem.
Yeah,
All
no,
right.
I definitely ask you CPA. My understanding is it's not, though, from what I've heard.
No problem. Thank you very much, gentlemen. And I just wanted to mention to everyone on the call that on the resources page of the COVID-19 resources page on our website, we do have the most recent application up there. So if any of you are in need of it, you can find it there. So with that, I'd like to thank everyone for joining us on the call today. And thanks to Paul and Steve for sharing such valuable information and insight during these trying times. We encourage all of you to share with us your thoughts on topics you'd like to see covered in future calls, and we will do our best to address them for you. Please stay tuned to your email as we announce our next call, and if there's other manufacturers in your network you think would benefit from this information, feel free to share this with them or let us know and we'd be happy to reach out to them. As I mentioned earlier, an archived version of this call will be available on our YouTube channel as well as in the COVID-19 resources section on our website. Thanks again, stay safe, and we look forward to speaking with all of you soon.